Today, we will talk about very good arguments why the retracement for Bitcoin might be not over yet. That will be backed by Bitcoin data no one is looking at right now, which is 9 years old. And also we will talk about very good arguments why the retracement might be over yet. And we will put that together and draw a conclusion in the end. So if you're already looking forward to that, make sure you smash up that like button right now. And that being said, welcome crypto friends and welcome back to MMCrypto. My name is Chris, and as always, guys, we are pumped to get straight into the content. So we will start things off with telling you that we have opened a German channel. So if you want to watch that video also, there will be a link on the bottom of the pinned comments, and also in the description you will find our German channel, and you can also watch that exact video right now. So make sure you go over, you subscribe, you give it a like and a comment and help that algorithm rolling. It's a very new channel. Thank you so much. And now let's get straight into it. What we will be talking about today, that's one part of the story, is good arguments why the pullback is not over yet. We will tell you exactly where the price due to that data might be going. We can already tell you 7,800 to 9,000. That will be very exciting, and also some very good arguments why it might be even over yet, and we will draw that conclusion. So first of all, the bearish arguments are coming from a big bull at the moment. It's an on-chain data fundamental analyst, Willy Woo. We really like him. His content is amazing. Usually he's very bullish, but at that time he is slightly bearish, and he is that because he's backing that up with some data, and we will give you some bullish arguments also in the end, so really wait for the end. First of all, he's talking about the on-chain volume profile, and to give you some perspective, what you can see here on the right side, on the right hand side, that's the on-exchange volume profile. So that's the volume at specific price levels. So this is accumulating to this bar right here on the exchanges. But on the exchanges, that's only trading. What we want to see is where the people, the cold storage people, are actually moving their funds. And you can see that only on the on-chain data. The on-chain data, on-chain volume profile is measuring transactions from A to B on the Bitcoin blockchain. And then they are accumulating that and adding that together at the different price levels. And what Willy Woo, thank you so much for that, did right here is he basically divided the Bitcoin all-time price history into 3 different circles. This is the 4th circle right now. Hopefully that's the bull market. He is dividing that into these circles and measuring the volume during bearish times in red and during bullish times in green. And what that gives to us is really powerful. So what we can see, and he basically summed that up very nice right here, is that in this bull cycle, it's a little bit like not the best resolution, sorry for that. We can see that there are 3 different waves on the way up. The first wave, obviously, that's the smartest money here in the accumulation period. That's the second wave after we broke the 200-day moving average. And that's the third wave where some people, especially also the smart people, might have moved their funds over to weaker hands who were selling into the pump and realizing basically something like a 3x profit right here. That was maybe the time where the money from the weak hands moved into the strong hands, okay? Or in this case, when the strong hands moved over their money into the weak hands. So that's really interesting. And what he figured out is we had this 3 initial waves in the beginning of that bull market. What he figured out is that in the last, not the bull market of 2017, but before the bull market of 2013, in that period, that we also had in the beginning 3 significant waves. The beginning wave of the very smart, in this case, nerd money accumulating as much Bitcoin as possible. The second wave, and then the third wave, the last shakeout wave before we were off to the crazy races. So what he figured out is that after that period, the people bought in right here. That were the weaker people bought in at these price levels. Then we had one initial spike and one shakeout, and that shakeout did not find its initial support at where the volume profile at MT-Gox was the highest. It found its initial support, before we were off to the races, where the volume on the on-chain Bitcoin were the highest, because that exactly suggests us where the initial sellers at these price targets right here found their break-even point to go back into Bitcoin. Because everyone who sold there and everyone who sold right here just thought, what did I do? I want to have a last chance. So we will find probably huge significant support at these price levels. So this has way more validity as looking at the on-chain, as looking at the exchange volume profile. So that being said, what are these price targets? And let's go back into that. Oh yeah, you can see some thumbnails over here. So let's go back into that and let's discover what the exact price targets of that might be. So what he is figuring out, that going into these levels here back again would actually equate to a price of 7,800 to 9,000 US dollars. You can see that right here. And I wouldn't call this a target, just a possible outcome if we repeat 2012. And that's very important. And that's where we want to pick that argument up. So yes, 7,800 to 9,000 is a possibility. And now in our opinion, more or less 8,300 to 9,000 are more likely. And we will tell you exactly why. So let's go back into the charts. And what we will do basically right now is we will go into the last bull cycle and we will show you how the bull market usually reacts. So on the way up, usually we will not take everyone with us, because many people will get shaky hands. They will read the news, they will get some Tether FUD, they will get some China FUD, they will get some Korea FUD, they will get some exchange FUD. We will shake out these weak hands, as we saw that also in the quote. And as we saw it in the last bull market, we already calculated that for you. 32%, very likely. 33%, very likely. 33 again. 39. Dude, 41%, 40%, 29%. And the first time we had a retracement of more than 40% was basically in the end of the bull market, 44%. So in our opinion, just pulling up the data from the past, the likelihood is the highest that we have a significant retracement between 30 and 40%. And we have been calling for that in our recent videos. You can see that this retracement must happen. So what does that mean for the marketplace right now? If we look at this retracement we had so far, we can see that we have already had a significant retracement of 31%, which is actually the average percentage retracement within a bull market. So if we really want to go into a bull market with a bullish bias and just buy up the dips, we should have started buying up at 29% retracement already, and then maybe waiting for other targets. But standing on the sidelines with 100% of your trading capital and just waiting for lower prices is just nuts, guys. We want to tell you the significant retracement might be already over. Only looking to the history data, which suggests that significant retracements are always between 30 and 40%. We hit this target already. So what's the worst case scenario in our opinion? Not 100% certainty, but the worst case scenario in our opinion might be 40%, 41%, which would lead us to a price of 8,200 US dollars. And because this was a really crazy run we haven't had before, let's put it at 45% or so, 7,800 maximum. This is only our opinion, but in the really worst case scenario, in our opinion, the worst case would be 45% or so, which would put us actually really at 7,800 US dollars. But in our opinion, if you really want to act accordingly as a rational investor, as a rational trader, usually a price target of 31% should be already a price target you should have scaled in already. So you shouldn't be staying on the sidelines for 100%. Very important. Many people ask us, where are you taking advantage of those crazy volatile market situations? What we are doing is basically migrated completely over from BitMEX over to Bybit. This will just take a few seconds, but it's very important because many people are asking us that. We are not trading on BitMEX anymore. You have crazy system overloads, especially at these volatile movements right there. So we are trading over there. It's a little bit cheaper. It's going more smooth. So if you want to trade there also and support the channel and get a free deposit bonus, you can go to the description on the top of the pinned comments. You will find that we have a partner link, an affiliate link, where you can get a free $110 deposit bonus, and you will also support the channel. You don't have to use that link, but if you want to use it, thank you so much. So that being said, guys, good luck, happy trading, and be very cautious. That's leverage trading. It is dangerous. You can have a very high upside, but also very high downside. So putting things together right now, what is the most likely scenario? In our opinion, the most likely scenarios, and we have been saying that from the beginning, since a few months, is always a 30 to 40% retracement. The biggest learning from that episode is that we have already retraced close to 32%. So if we would be trading with a trading portfolio, we would have scaled in already and be long for a specific volume already. But the likelihood of retracing a little bit more is still in place. But in our opinion, the highest retracement is 7,800. But we actually think that this retracement might be already over, because in bull markets, people tend to expect higher retracements because the greed is also going to the downside. People want to go in at lower and lower prices. And maybe people will just miss out the boat. So be in place for that possibility, be in place for both scenarios, set up all your trades accordingly, due to the fact that 30 to 40% retracements are the most likely scenario. Let us know what you think about that. Let us also know, please, what you think about this on-chain volume. Do you think that has more significance than the on-exchange volume? Let us know in the comment section down below, and also leave a like if you think that was valuable. It will be highly appreciated. Go to our German channel also. And yeah, that being said, we will see each other at the next episode of MMCrypto. There is a Bybit tutorial popping up right here. You can check that out, leave a like, and support the YouTube algorithm. So that being said, guys, thank you so much for watching, and we will see each other at the next episode of MMCrypto. And as always, guys, bye bye.